So in this video, we're going to talk about Southwest. Now, the airlines have been somewhat struggling as we approach potential recession later this year. However, recently, Southwest got upgraded at UBS from a sell to a neutral. And so, as you can see, we're getting a nice pump over the last couple of weeks in Southwest, while other airlines have been range bound or on a decline. Now, before we look at the charts, let's actually look into why UBS upgraded the stock. So UBS upgraded Southwest from sell to neutral this week, citing the airline's whatever it takes approach to driving financial improvement. The firm believes there's increasingly assertive changes raise the potential for improving financial performance despite the weaker cyclical backdrop. This is what I'm referring to in terms of the airlines getting hit right now as we go into a potential recession later this year. Now, Southwest's recent decision to charge for checked bags marks a major shift from its longstanding policy of free bags. UBS estimates the airline could generate 275 to 1.1 billion in additional annual revenue depending on how many passengers opt to check bags. Now, in addition, Southwest is rolling out a basic economy fare, a move UBS sees as a more aggressive segmentation strategy, which should ultimately support utilization and stronger revenue on its regular economy and extra long room seats. However, UBS warns that the softer cycle backdrop is a partial offset to Southwest revenue and cost side initiatives, with airline demand softening in Q1 and a weaker macroeconomic environment expected to persist into 2026. All right, so again, later this year, I'm anticipating that we'll be in a recession, and it looks like that will carry over into 2026. Nevertheless, this is the monthly chart, and as you can see, the best levels to have gotten long was sub $24. You had a rally, base and candles rally, forming two levels. This is called a level on level. Again, this is the monthly chart, and you can see how price on both occasions penetrated that first zone and ricocheted from that second zone. The dash green line was your entry with a stop indicated by your red dash line. And as you can see, it's been a great month for Southwest, which opened at 30, came down to 27 and a half, picked up those unfilled buy orders, and now price is sitting at 34.84. So if the month was to close today, this would be a nice increase for Southwest. Nevertheless, you do have some rejection wicks or sell wicks right above price. So I'm going to put $40 as a target. This is the round hole psychological number. So now let's start drilling down to this is the weekly chart. And let me just adjust the moving averages. All right. So if price is going to move higher, it needs to contend with this first sell rejection wick. This is a rally, base rally. And so I'll just put that here to kind of indicate where price is in relation to the levels of interest. And your next level of interest is going to be this rally, basing candles, and then the rally out. And so we're going to indicate that as a huge wide weekly sell level, but I want to try to reduce the risk. So let's go to the daily chart. All right, so we don't have that wick that we noted on the weekly chart. Let's see how it looks. All right, so this is the weekly chart. All right, let's go down to the daily chart again. All right. So I'm not in love with the structure. However, if I zoom to the right, this was a weekly level that we saw. That extended range red candle was the result of this gap down. And so the charts are suggesting that the move in price, well, the best levels to have gotten long was, sub $30 when price reversed. Now you're getting to levels where in the past it was a level for sellers to step in and push price down. So what would I do if I was a bag holder of Southwest? If I got in below current price, I would start taking some off the table. As the chart is suggesting, look for reversals based on the zones in the coming days and weeks. Thanks for watching. Subscribe. Please like the video.